Hello, this is Business Live from BBC News with Sally Bundock and Susannah Streeter.
Oil prices rise as Saudi Arabia signals a cut in supply in the pipeline.
We're live, we're in London. That's our top story today, Monday the 12th of November. The promise of an output cut by OPEC following their meeting in Abu Dhabi is aimed at halting the slump, which has seen crude slide by a fifth since early October. So by how much, when and what will be the impact? We'll tell you all you need to know. Also in the programme, Singles Day sets a new sales record for the internet giant Alibaba as customers splash out almost $31 billion in just 24 hours. And global financial markets are in a holding pattern with Europe all headed up at the open as investors wait for key economic news from the US and China midweek.
And we'll be getting the inside track on flexible workspace. Demand in the UK has exploded, outstripping New York by some margin. But is the growth sustainable? We'll talk to the founder of the UK shared workspace provider, Huckletree. And as we've been hearing, Singles Day, invented by Chinese giant Alibaba, has smashed sales records again. It's the biggest in the world online shopping day after Black Friday and Cyber Monday. So today, we want to know, do you go on shopping sprees during promotions or are you wary of the bargains? Tell us using the hashtag BBC BizLive.
Yes, do get in touch with your best bargains, your cautionary tales and your top tips. We want to hear them all. Now we begin with oil, which has jumped after OPEC's top producer, Saudi Arabia, signalled a cut in output next month. That was as major crude producers meeting in Abu Dhabi to address the recent slide in prices said supply next year would outstrip demand. So OPEC members currently produce a total of around 33 million barrels per day. These are the two most powerful figures that you need to know about. We've got Mohammed Bakindu, who's the OPEC Secretary General, and Khalid Al-Fali, Saudi oil minister, who actually said the kingdom is ready to cut its production by 500,000 barrels per day in December. The US and Russia are also major producers at a rate of around 11 million barrels per day each. And the US especially has been supplying so much more oil to the global market that it's dragged the price down. So if we have a look over the last 12 months, you could get a real sense of the bumpy ride that we have experienced. And you can see the significant slide we've seen from that peak there when it comes to the price of oil.
So thanks. So with me is Nick Coleman, Senior Oil Analyst at S&P Global Platts. Hello there, Nick. So on the face of it, the comments made in Saudi Arabia have actually pushed up the price a little, haven't they? Brent up by around 2%. But it's not an agreement amongst all OPEC members at all, is it?
Not at all, and one very significant player who was absent were the Iranians, of course, yesterday. And I think actually the Saudis themselves are slightly hedging their bets. They want to see what's going to happen. They have this formal full OPEC meeting next month where the real decisions get taken. At the moment, you know, things are rather in flux. So only last week the United States reinstated sanctions against Iran, and I think everybody wants to sort of see how that really plays out in the next few weeks.
Absolutely. So do you think the talk will have been in Abu Dhabi amongst all of the OPEC members that actually it's also the rise in production in the US that is causing problematic? Because it's a record high, isn't it?
It's a record high, and stock levels in the United States are very high. They've been rising for about 2 months. So these are very closely watched sort of storage levels of oil in the United States, absolutely key market for oil, and the US economy has been sort of, is absolutely crucial to this.
However, we talk about the fact that obviously oil producing nations want to see the price rise, but what about the consumers? Because actually this 20% drop since October actually has been pretty good, hasn't it, for many consuming nations, likes of Indonesia and to some extent India, grappling with high inflation.
Right, and people in the oil industry, they do think about at what point, Do we reach a level where people start to consume less? I've heard CEOs in recent weeks talk about $80 Brent futures price being sort of getting into a slightly, sticky, dodgy territory where people start to actually use less oil. So they do have to think about not, causing a price spike as well. It's a fine balance, and Mr. Faleh, whose photo you showed just now, he is almost like the central banker of oil, and people really pass every sentence that he says to work out what he's meaning, and he's trying to give a steer, where he's going.
Against all of this, of course, we have the Paris Climate Agreement and all of these targets, yet we see consumption rising still rapidly around the world. Do you think, though, that is still concentrating minds? Because at some point, are oil-producing nations thinking that it will go off a cliff demand?
I think so, because people, the idea of energy transition away from oil is so much talked about in the media, and people have to think about what's the need for their oil in future, and investors have to think about it as well. So investors, I think, especially in the big oil companies, are thinking twice about this question about will there be some kind of peak in consumption maybe in about 10 years. But OPEC oil ministers are also looking at the hard numbers, which are very clearly that oil consumption is rising year on year by more than 1 million barrels a day. We're probably around 100 million barrels a day of oil consumed at the moment.
OK, Nick Coleman, many thanks for talking through all the outcome of that meeting in the UAE.
Now let's have a look at some of the other stories in business today. The Japanese giant SoftBank's domestic telecoms unit has received approval to list on the Tokyo Stock Exchange, an initial public offering that some say will be worth over $21 billion. The unit, SoftBank Corp, is set to list on the exchange sometime next month. The move will mark the transformation of the firm from a mobile network provider into one of the world's biggest technology investors.
Spirits giant Diageo has sold 19 brands to US company Sazerac in a deal worth $550 million. Among the brands included in the sale are Seagram's VO Boost and John Beck. The firm says the net proceeds of around $438 million after tax and transaction costs will be returned to shareholders through a share buyback programme.
Europe's biggest technology company, that's SAP, has agreed to buy Qualtrics International for $8 billion in cash, preempting the US enterprise software company's plans to go public. This is SAP's biggest deal to date, topping its 2014 purchase of Concur Technologies for $7.2 billion.
Italy's economy minister is looking to revise down his country's budget growth forecast for next year to try to reach a deal with the European Commission over fiscal policy, according to a government source. The Commission rejected Italy's fiscal plan for 2019 last month and gave Rome until Tuesday to present a new budget.
Now let's talk Singles Day, because there are some staggering statistics out there today about how much money went in seconds, hours and minutes. This is Alibaba's creation, of course, pulling in a record $30.7 billion in sales in that 24-hour retail frenzy.
It certainly was a frenzy, and the Chinese company invented the occasion to celebrate the unattached in 2009. It's since become the world's biggest online sales event. Well, Sarah Toms is in Singapore to tell us more. Interesting, though, although we've had these record sales, sales growth actually slowed down, didn't it?
Well, that's right. I mean, it was a manic day, there's no doubt about it. It was after 24 hours of frenzied buying, selling and advertising on November the 11th, which is Singles Day. Alibaba did announce that its sales soared past last year's record of $25 billion US. Now, Alibaba, that's often compared to Amazon, also said, as Sally was saying, it broke more records. The first $1 billion of sales was completed in a staggering 1 minute and 25 seconds, with almost 200,000 brands up for grabs. It was shopping heaven. Shoppers were snapping up a vast range of purchases from iPhones, furniture, milk powder, even cars. And they weren't just buying online. Analysts said more and more purchases were being done through the mobile app. I think it was something like more than 300% increase on the app alone. So with this year's record $30 billion of sales. It increased about 27% compared to last year's total. But despite that record haul, it's less spectacular than the 40% growth that was recorded last year. And that's because Alibaba is coming under pressure from China's slowing economy. New rivals are appearing also in the e-commerce industry. And of course, don't forget that trade war with the United States.
We can't forget it. Sarah, thank you so much. Sarah Tom's in Singapore. Shopping hell or shopping heaven? Do send us your thoughts on these single days, Black Friday, Cyber Monday, whichever you want to love or hate. So in terms of markets, that's the Friday close for Wall Street. It was a pretty lackluster day in Asia, actually. Not much going on. Markets are in a bit of a holding pattern until midweek when we're going to get economic news out of the US and China. Let's look at Europe now. The stocks pushing up markets in Europe are the oil companies. So BP shares up 2.5%, Shell up over 2%, Total in France up over 1%, because of course we've mentioned the price of oil has gone up some 2%, Brent today already. A big loser in London is British American Tobacco, down 11% following reports. The US Food and Drug Administration wants to ban menthol cigarettes. Really interesting. BAT owns a Newport. It's the biggest menthol cigarette brand in the US, so that could be a real blow for BAT. Let's look ahead to the day on Wall Street. It's over to Kim Gittleson.
This week, Wall Street investors will be focused on America's retailers. We'll be getting third quarter earnings from some of the biggest U.S. department stores, JCPenney, Nordstrom, and Macy's, as well as the world's biggest retailer, Walmart. When it comes to Walmart, investors will be curious to see what impact tariffs have had at the company. Walmart warned earlier that it would have to increase the prices of some of its goods as a result of tariffs imposed on Chinese imports into the United States. Then after all of that, we'll get a larger picture of the American retailing landscape when October retail sales are released on Thursday. There, investors will be curious to see what proportion of those sales are coming from brick and mortar stores, which of course have been struggling recently due to the rise of e-commerce sites like Amazon.
Kim there. Well, joining us now is Ritu Vahora, Investment Director at M&G Investments. Hello there,
Nice
Ritu.
to see you. Good
Thanks
morning.
very much for coming in. So let's talk about all of those announcements and numbers out in the US later, what we're expecting.
Well, I think that's why the markets are a bit more subdued this morning, because there's so much data coming out. So on Wednesday, we have CPI data out from the US. It's looking to have slowed down there, particularly where the energy price was earlier this year. But we've got data coming out from China retail sales, and that's been a bit weaker. So I think the market will be looking for any sort of tone of whether that slowdown in China is really happening.
It's quite an interesting week, really, isn't it? Because in the middle of the week, we'll have a real picture of the world's two biggest economies that are kind of at each other when it comes to trade.
Absolutely, and I think it'll be a good indicator of the health of the global economy, what the US is doing, which has clearly been the forerunner compared to the rest of the world. So whether that deviation carries on, whether indeed China's slowing down. And of course, Tencent also reports on Wednesday, so it'll be interesting to see how that Chinese behemoth does in the week.
What's interesting to see that despite these record sales on the Singles Day invented by Alibaba, it has slowed down, and that adds to data that came through at the end of last week as well, doesn't it, about China's economy?
Absolutely, but I mean, even if you look at the sales, on Sunday, I mean, they were record. I think it was $1 billion of sales in sort of 85 seconds, so pretty phenomenal. But I think you mentioned earlier, it's down about 27% on last year. It's still phenomenal growth, and I think, Jack Ma, this is his last Sunday of this sort of event before he steps down as chairman. But I think the market's still waiting to see what the health of the economy is saying. But, the Chinese markets here, I think it shows the consumer is still very strong, given the level of sales we've seen.
And just briefly, what else is on your radar? For example, are you watching Brexit, the cabinet meeting tomorrow? There's been a lot of turmoil over the weekend in the papers. The pound is down a bit on that turmoil today.
Absolutely. I think the markets are being buffeted by a few things. So in the UK, clearly Brexit uncertainty carries on. There are sort of concerns whether that cabinet meeting will go ahead today with Theresa May, and arguably she can get that draft plan ready by tomorrow, which is where the deadline was. And ultimately that impacts, will we have this EU summit later in November? So the more uncertainty we have coming from her own party, questions around her leadership, does bring more uncertainty around whether this EU summit will really happen. I think ultimately, hopefully, Brexit will get to some sort of deal, but it's whether Prime Minister May will still be around.
OK,
Come
Rita, thank you very much. We'll be back later to talk through some of the paper stories. Still to come.
Lots more to come. Yes, the UK has seen massive growth in the market of flexible workspace, but can this continue and who are the winners and losers?
We'll get the inside track from the founder and CEO at the shared workspace provider, Huckletree, with Business Live from BBC News.
First, though, let's talk shopping, but we're not talking e-tailers, we're talking bricks and mortar. Footfall in the UK's high street retailers fell some 2% in October compared to last year.
Yeah, well, that's according to a report from the British Retail Consortium and Springboard. With retail becoming more digital, vacancy rates have risen to 9.6% at a 15-month high.
Rachel Lund is joining us from the BRC. Rachel, it's another gloomy picture of just how things are on the high street.
Yes, you're right. I mean, what we're seeing is an ongoing trend of falling footfall through the high street. As people are shopping more and more online, the fact is they are going to the high street less.
So, Rachel, you know, things are getting very, very difficult, and some retailers in particular we know are sort of hanging in the balance right now. In terms of what the government proposed in the budget, how helpful were some of the changes they announced as they try to inject more life into the high street?
I think in short, not very helpful. Whilst it's great, they offered a little bit of relief to smaller businesses, but that relief is only temporary and will only actually help quite a small proportion of retailers. The vast majority of people working retail are actually employed by big retailers who won't benefit from this change in business rates.
Ultimately, though, isn't it up to the retailers to offer something more? We've seen the might of Alibaba. How can you compete against online with the likes of Amazon? So it's got to be about the experience, and perhaps these retailers who are struggling just aren't offering that to customers.
So yes, you're right. Retail is having to transform itself to make its destinations more about experience. But the fact is, if your costs of doing business are going up so fast that you don't have any money to invest in transforming your business, then that's not really a viable option for you.
So are you at the BRC then calling for further taxes on e-tailers?
Not at all. Actually, what we're saying is the retail sector should face a lower burden of taxation. What the government needs to do is think across the piece at how businesses are taxed in the whole.
Well, Rachel, thank you, Rachel, for your time. Rachel Lund there from the British Retail Consortium.
Now, Sally mentioned it earlier on the Business Live webpage. We have more on this menthol ban hitting British American tobacco because its share price plunged after a report in the Wall Street Journal. Find out more online.
This is Business Live. Our top story today. Oil prices have jumped after Saudi Arabia signalled that an output cut is in the pipeline.
Oil producers want to halt a price slump which has seen crude slide by a fifth since early October.
Now, let's get the inside track on flexible workspace. Research shows demand for flexible workspace across the UK saw record growth last year.
Take-up in Britain's largest regional cities increased from 2% of all city centre lettings in 2016 to 7.5% of take-up last year.
London remains the global capital for co-working spaces, easily outstripping New York. Since 2012, flexible workspace leasing has represented an average of almost 3% of the market in Manhattan compared to nearly 11% in London.
An estimated 1.7 million people will be working in around 19,000 co-working spaces globally by the end of 2018.
And 29% of all co-working spaces around the world were opening in just the past year.
So there's a real frenzy going on in this marketplace at the moment. Well, Gabrielle Hersham, founder and CEO of UK shared workspace provider Huckletree, is with us. Hello there.
Hi.
So tell us how you got involved with this. When did you realise that this was a good business to get into? Was it before the deluge?
It was slightly before, although there were already some kind of key players in the market. I think for us it was really about building something that could cater to the tech scene that we felt was about to explode in London and in the UK, and building a place for them to all come together.
So this was back in 2010. Is
Yes.
that right?
No, 2014.
Sorry, 2014.
Yes.
So about 4 years ago. Just
Yeah.
tell us how you found this process of trying to start a business, what were some of the challenges you faced?
It was difficult for me. I think also I didn't have a background yet in business. So for me, going out there as a woman in a very kind of male-dominated investment world, trying to raise money was challenging. And kind of growing on that, we heard a lot of stories kind of anecdotally in our community about not only female but also BAME, ethnic minority founders who have experienced similar problems whilst fundraising as well.
So you undertook some research and found that this wasn't just anecdotal?
Yes, so the research that we undertook, we wanted to kind of cover the landscape of UK and Ireland and figure out what the actual situation was. So we interviewed, I think it was over 200 founders, and just tried to understand who had experienced challenges during fundraising over and above what you would expect to be normal. And the results were quite shocking, actually. So we discovered that just under 50% of founders had either experienced discrimination firsthand or knew somebody that had, which is shocking. And in the UK and Ireland, which we feel, very advanced countries, that still exists.
And it's interesting you say that because, of course, we've mentioned, London is seen as a global centre for things like shared workspace, and many of those who want that sort of provision are people starting out, people who are beginning a business or working as a sole trader, that kind of thing. They're the kind of people who need investment.
Yes, they are. I mean, our members, most of our members are kind of startups, scale-ups, businesses that do go on to raise investment, and also on the flip side, investors, so VC funds, family offices, all looking to invest in technology. So you would hope that kind of putting everybody together would kind of open up the world of fundraising and the possibilities.
So what have you used this research for to differentiate yourself in the market?
The purpose of the research wasn't to differentiate ourselves. I think the purpose of the research was to take a stand for the topics that our members are facing. And like I said, off the back of the research, we now have become very passionate about equalising the landscape and doing our bit to do that. And
how do you stand out, though? Because you started 4 years ago, but actually the market, as we've said, has really grown rapidly. Yes. And even big traditional players like Regis are providing flexible workspace, but also companies that aren't in this industry at all, but actually just want to make money by renting out empty parts of their offices.
Sure. I mean, the landscape now is hugely competitive. I think for us, it's always been about, we have a kind of curation membership policy, so we are able to ensure that all of our members operate within the wider technology remit. And I think for our members, it is very much about knowing who you are working next to. So members want to be able to learn from more seasoned entrepreneurs. The seasoned entrepreneurs want to be able to give back to the community. And I think that that curation approach has seen to us growing our communities in a way that has been interesting.
Okay, Carola Hersham, thank you very much for
coming in.
Thank you.
Good luck.
Thank you. Shared workspaces, thank you.
We shall keep an eye. Now, in a moment, we're going to talk to you about your comments about things like Singles Day.
And surfing.
And surfing.
Yeah.
Surfing as well. It's all happening here. So just stay with us. This is how to get in touch.
Stay up to date with all the day's business news as it happens on the BBC's Business Live page. There's insight and analysis from our team of editors right around the globe. And we want to hear from you, too. Get involved on the BBC's Business Live webpage at bbc.com/business. On Twitter, we're at BBC Business. And you can find us on Facebook at BBC Money. Business Live, on TV and online. What you need to know, when you need to know.
Okay, Rito is back to talk about all the other stories in the newspapers. But first of all, we were asking a little bit about what you think about all these big promotions like Cyber Monday, Singles Day, and that kind of thing. What's your opinion? Do you wait for a bargain?
Well, I love shopping, so that's I don't have to wait for the big sales. But I think particularly when I'm looking at big ticket items, whether it's a TV or a new refrigerator, I do tend to wait for that sort of Black Friday or Cyber Monday.
I thought about? I just thought with the kind of frenzy we were discussing that was experienced on Sunday, as in Singles Day, people who are really hardcore at this, they're going to have several devices going all at once. Because there must be that whole thing of your system going down, you're desperate to purchase something and
Mark
it's going to disappear.
He says, I feel that November 2018 is one big sale, and what you buy, you would buy anyway, but at a better price. So it certainly seems as though some people are looking at everything.
Let's talk you through some of your comments there. So we've got William from Glasgow saying these promotions were exposed as being a kidology and Black Friday sales were not genuine, and further reductions were seen in the run-up to Christmas and then again in January. It just goes on and on. And
Andy from Cambridge says too many big sale events, certainly not helped by price rises in the months beforehand.
Exaggerating the discount. Andy, interesting little comment there. So lots more on that. Let's now take a look at some of the other stories in the papers. I don't know whether you want to start.
It's all about retailers as well. This push for retailers to take more responsibility as far as recycling costs are concerned. And many consumers will say, look, this is a really good idea. Perhaps there will be then less packaging.
Yeah, and I think, it's a challenge, isn't it? Because right now, sort of retailers pay a very small amount in terms of the cost that goes through both collecting and recycling. And here in the UK, we export about 2/3 of our plastic packaging. So there is an onus about the long-term sustainability, particularly with countries like China now saying they're banning exported plastic to their country. So as more and more countries do this, I think the onus comes on UK companies to think, how do we, as a long-term sustainability, deal with our garbage?
It's quite interesting though, because of course a lot of the retailers that might have to sort of deal with the garbage, deal with the cost of the garbage, are those that are right under financial stress because of the difficulty on the high street at the moment.
Absolutely, and I mean that is the challenge, because ultimately this will start impacting margins. It is quite a significant cost, and I think right now so the government makes about 17 million and they're talking about that from 500 to a billion. So it's about the question of sustainability for the environment versus the margins of companies as well.
Ritu, thank you. Just finally, I want to point you to this story about the town that once feared 10-storey waves is now welcoming extreme surf. As you can find out more, I will tweet
Susannah
it later because I did mention it, and I love that story. That's it from Business Live.
Bye-bye.
Bye-bye.